In the dawn of human connection, before empires rose and fell, a simple idea sparked a revolution. It wasn't forged in fire or carved in stone, but born from a fundamental human need, the need to trade, to share, to build something greater than ourselves. This is the story of money, an epic journey that mirrors our own evolution, from humble beginnings to a future we are only just beginning to imagine. Our story starts not with coins, but with trust. Imagine a world where your wealth was what you could grow, hunt, or craft with your own two hands. A farmer with a surplus of grain, a fisher with a bountiful catch. The barter system was our first economy, a direct exchange of value. Grain for fish, pottery for tools. It was personal, tangible, and deeply human, but it was also inefficient. What if the fisherman didn't need grain? This double coincidence of wants was a puzzle that needed solving. Humanity, in its endless ingenuity, began to search for a better way. The solution came in things everyone desired: salt, shells, cattle, beads. These were the first commodity monies, items with intrinsic value that became a common medium of exchange. They were a step forward, a bridge between needs. But they were still cumbersome. You couldn't exactly carry a cow in your pocket to the market. The world was getting bigger, trade routes were expanding, and we needed something more portable, more durable, more divisible. The answer lay deep within the earth. Glistening, rare, and universally coveted, gold and silver. These precious metals changed everything. They could be weighed, measured, and stored. For the first time, wealth became standardized. From the bustling markets of Mesopotamia to the shores of the Aegean, merchants began trading with slivers of metal, their value determined purely by weight and purity. This was a monumental leap, but it still required scales and scrutiny at every transaction. The final piece of the puzzle was yet to be placed. Around the 7th century BC, in the ancient kingdom of Lydia, a visionary idea took shape. What if the state guaranteed the weight and purity of these metal pieces? By stamping them with an official seal, an emblem of a king or a god, the first coins were born. Made of electrum, a natural alloy of gold and silver, these Lydian staters were more than just metal. They were a promise of trust, backed by authority. This innovation spread like wildfire across the ancient world, from Greece to Rome to Persia and beyond. Money was no longer just a tool. It became a symbol of power, an engine of empire, financing armies, building cities, and connecting cultures across vast distances. As civilizations flourished and trade networks expanded along routes like the legendary Silk Road, carrying coins became risky and inconvenient. A new chapter was about to be written, far to the east. In 7th century Tang Dynasty China, merchants seeking a safer alternative to heavy sacks of coins began using paper notes of credit. These receipts, issued by trusted parties, promised the bearer an equivalent amount in metal coin upon request. The government soon recognized the genius of this system. During the Song Dynasty, they issued the world's first official paper currency, the jiaozi. Lightweight, portable, and backed by the state, paper money was a revolutionary concept. It was a leap of faith, a transition from tangible value to represented value. An idea that would take centuries to fully catch on in the West, but one that would ultimately redefine the global economy. Back in Europe, the embers of the Roman Empire gave way to the vibrant chaos of the Middle Ages. As trade reawakened, powerful merchant families in Italian city-states like Florence and Venice pioneered modern banking. They were money changers, lenders, and financiers, creating complex systems of credit and bookkeeping that fueled the Renaissance. Their ledgers and letters of credit were the invisible threads weaving a new commercial fabric across the continent. This laid the groundwork for the next great transformation, the Industrial Revolution. Steam, steel, and smoke billowed across the skyline, heralding an age of unprecedented production and growth. Factories churned out goods, railways connected cities, and a new global economy demanded a more sophisticated financial system. Central banks were established, national currencies were standardized, and the stock exchange became the heart of modern capitalism. Massive printing presses produced intricate banknotes, symbols of national pride and economic might. Vaults swelled with gold, the bedrock of the gold standard, anchoring the value of paper money to something real and tangible. Money was now the fuel for progress, an abstract force shaping the destiny of nations. The 20th century accelerated this abstraction at a dizzying pace. The tap of a telegraph, the click of a telephone, the hum of a mainframe computer. Money began to dematerialize, transforming from physical notes and coins into electronic pulses. The credit card, introduced in the 1950s, put the power of digital debt in our pockets. ATMs appeared on street corners, connecting us to our accounts 24/7. In the quiet hum of server rooms and through undersea fiber optic cables, trillions of dollars began to circle the globe every day, moving at the speed of light. We entered the age of digital finance, where wealth became a number on a screen, a stream of data flowing through a vast, interconnected global network. Then, in 2008, a mysterious paper published under a pseudonym proposed a radical new vision. A purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. Its name was Bitcoin. This was the birth of cryptocurrency and the blockchain technology that underpins it. A decentralized, transparent, and immutable ledger maintained not by a single entity, but by a global community. For the first time in history, we had the potential for a monetary system without intermediaries. Digital coins, secured by cryptography, mined by powerful computers, and traded on a global stage. This wasn't just a new form of money. It was a new philosophy, a challenge to the very foundations of our financial world. Today, we stand at another precipice. The line between the physical and digital worlds continues to blur. Artificial intelligence now analyzes markets and executes trades in microseconds. Financial data is visualized not on screens, but as interactive holograms. The very concept of currency is being reimagined, with central banks exploring digital versions of their own money. We are moving towards a future of finance that is smarter, faster, and more interconnected than ever before. From a handful of shells to a global network of decentralized code, the story of money is our story. It is a testament to our enduring quest for cooperation, our relentless drive for innovation, and our collective belief in a shared future. It is an idea that has been molded and remolded, from physical objects to abstract promises, from centralized control to decentralized networks. As we look ahead, one thing is certain: the evolution is far from over. The next chapter in the epic of money is being written right now, and it promises to be the most transformative one yet. Thank you for watching.